Dealers speak out, blowing your money on silver. I just got back from my local coin shop here, and my dealer is telling me this issue is twofold. First, when we look at silver, we have to understand that many of us as stackers, we don't just stack these generic rounds. Often we go for larger bars, and at the same time, we're feeling discouraged because this gold is presently, at the time of this recording, we're at about $3,150 for one of these ounces. And that's without the premium on top, right? This is at St. Gaudens. This comes with about $100 premium over it. It's considered numismatic. I should not be destroying it with my fingers. So gold is out of reach. Yet, when we look at stacking silver and we see that, let's take a 100 ounce bar. This is what my dealer's explaining to me. When you compare a 100 ounce bar, 100 of these, right, but in the form of a bar, a 100 ounce bar compared to an ounce of gold, really, the difference is minimal. When you're looking at the premiums that come with that 100 ounce bar, per ounce, all combined into what you're paying to take it home, it's really minimal. Yet, the ROI for this metal, for this gold, is way, way stronger. I mean, just look from year 2000 to present, 2025. Gold has gone up about 11x and silver about 7. So it's really a big difference. And again, we're just talking generic, right? Here's a generic. This is just maple, generic maple. It's really a big difference on your ROI. And the other issue is that today, look at this. This is a silver to gold ratio chart. And you could see today we're at about 92 to 1. And that fluctuates. In the past week, it's been from 89 to 92. So let's say about 90 to 1. So 90 ounces of silver will get you 1 ounce of gold. But look at this time last year. We were at 74 to 1. You see how that's a huge difference. That was year to date, 74 to 1. Let's go back 4 years ago. Look at that, 64 to 1. This is how many ounces of silver you need to pick up that 1 ounce of gold. That's just 4 years. And look, and it can drop even further. Look, let's go back. Here's 14 years ago, 31 to 1 in 2011. It dropped down to 31 to 1. And when you look at this chart in total, I'm showing you a 15-year spread, you really see the fluctuation, right? And it will dip, and it does dip. So that's really what my dealer is showing me, that when you're collecting this silver, you're accumulating this hoard of silver. Really what you should be doing is following that silver to gold ratio, because gold will give you a stronger ROI. It just will. And history shows that. And certainly now it can be, you can't argue against that. And really, this is why I diversify my investments. I want to thank Revival Gold for sponsoring this video today. Their ticker's on your screen. It's OTC MKTS RVLGF. Check this out. Trump issued an executive order titled Immediate Measures to Increase American Mineral Production. This will boost the domestic production of gold, and it aligns with the recent surge in price, breaking, as I stated at the top of this video, we're about $3,150 per ounce. Now, with this shift, Revival Gold has become a very attractive company. So attractive that Dundee Corp, a $200 million company, they've secured a 5% stake in Revival Gold. You heard that correctly. This provides gross proceeds of 3.2 million Canadian to the company. 3.2. That is the type of injection I look for in a mining company. I'm very excited about this company. You got to check them out. RVG has a past-producing gold project in the western U.S. called Brownfields, and these funds will be used to advance that project. With Trump's recent executive order, gold mining in the U.S. is happening, and it's happening now. This is why I'm excited about this company. It's happening right now. Their flagship projects are the Mercer Gold Project, and they have 1.64, you heard that, 1.64 million ounces of gold inferred. And it's in Utah. And their Bear Track Arnett Gold Project has 4.6 million ounces of gold inferred in Idaho. This is in the U.S. This is gold mining here in the U.S. Combined, Revival is sitting on a resource of 6.2 million ounces of gold. That's the number that I want to hear. 6.2 million ounces. It's making RVG one of the largest junior gold developing companies by ounces in the ground in the U.S. Look at this. This is from Resource Stock Digest. It says, at Mercer, the Revival Gold team is anticipating the release of an updated mineral resource and PEA within the next few weeks, wherein it is targeting 80,000 to 100,000 ounces of gold production per annum at a 9 to 10-year mine life. This is bolstered by positive metallurgy test results already in hand. This is exactly what I like to see for mining. This is what I want to see. Beartrack Garnet has the infrastructure in place. They're ready to go ahead as Trump makes this a safe and mining-friendly jurisdiction here in the U.S. Beartrack Garnet already includes an ADR plant for processing the gold, an 11,000 square foot core facility. They have solution ponds, hydropower, a water treatment facility. It holds the distinction of being Idaho's largest past producing gold mines. Again, we're talking about a pair of high potential gold development projects at a combined 6.2 million ounces. That's the number that I keep in my head, and that's what you really need to have in your mind. They're situated within the ultra-safe confines of the U.S., all at a sub 75 million Canadian market cap. You can tell I'm excited about this company. Perform your own due diligence and check them out. Their ticker's on your screen. It's OTC MKTS RVLGF. Check out Revival Gold. Click the link in the description below for more information, and I'll see you on the next one.